Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. Today is Thursday, September 11th. Now, because of some personal business I had to take care of today, this is going to be an abbreviated video. I did not have any time to do any research, so I don't have any idea to give you for tomorrow. We're basically just going to go over the major indexes. So let's talk a little bit about the market today. First, let me explain what the market's job is. The market's job is to complicate and confuse everybody who follows it. That's what the market tries to do. It tries to confuse everyone, and it usually does a pretty good job. That's why we always have a game plan, and that's why you need to stick to your game plan, because today what started off looking like it could have been a very nasty, ugly day, technically, all of a sudden stopped dead in its tracks after the opening and climbed all the way back up and closed almost on the high of the day. This is a day that clearly was set up to confuse everybody. It's about the only way I can explain it. But even with this day, it doesn't change the look of these patterns. Okay? I remember saying the other day that we may have to back and fill for a few more days before we break to the downside, and I'm seeing today's action, even though it started out looking pretty badly, as just another backing and filling day. That's how I'm going to explain the day. It doesn't change the look. So now we're going to take a look at the indexes, and I'll show you that the look of these patterns has not changed with today's rally. So don't go away. I will be right back. Okay, we're looking at a daily of the Dow, and even with this rally, this look hasn't changed. We still have these declining tops. We still have this rollover look, and I just think that the break has been delayed. I said yesterday, after talking about this day, that we could back and fill for a few more days before we actually break again, and that's what I'm putting today's rally into, that category of just another day of backing and filling, and it could go on for a few more days before we actually get the break that I'm looking for. Okay, let's take a look at the transportation average. Rallies back up into the resistance area. It probably has a little bit more room, but we also still have this rolling over look. This is the bearish look to this pattern. Even though we're kicking back up into it again, the look has not changed. Russell 2000 rallied back up into resistance. We probably could rally as far up into this area here without changing the look. These declining tops, this descending triangle look, still a negative look to this pattern. This is still a play on the downside, the way this pattern still looks. SPY, which is basically Standard & Poor's 500, another, I'm just putting it in the backing and filling category day. It's not a breakout. It doesn't change the look of the pattern. It just, was a little bit of it's an unusual move from the way they opened so ugly, for them to regain their strength and rally back up. But like I said, that's the market's job. The market's job is to confuse us, and it's our job not to let that happen. That's why we have a game plan. QQQQs rallying back up into resistance, backing and filling. This could go on for a few more days before the break. The market's going to make its move when it's ready, not when I think or you think it should happen today. And that basically was proved again today. That lesson gets proven many, many times. These markets have their own inner clock, and they'll go when they're ready to go, probably when we least expect it. All right, that's my view of the market. Nothing really has changed. The patterns haven't changed. The look hasn't changed. And my outlook for the market has not changed. So until tomorrow, this is TK signing off.